Okay, welcome back to Remote Trading Room. I'm Bill Kaufman. Today we're going to have a special about unusual options that happened on today, August 2nd. This is the day after last night the Fitch downgraded the U.S. Treasuries from AAA to AA+. So a lot of movement to the downside in the markets. So let's look at some options. We're on the Thinkorswim trading platform. And this is simulated, but we're after market hours now. So all the numbers are good. These are what the closing numbers were. We're going to look at the S&P, SPY. This is the ETF, today's stats. There we go. Calls 8.4 plus million, puts 10.6 million, PC ratio 1.263. And let's see what was actually traded. Okay, we go to time and sales, and while it's loading, remember, this is the time, this is the actual option, this is the quantity, the price in the exchange, the market, delta, applied volatility, the underlying, and condition, spread or outright. Okay, and, well, of course, the top two are here, are the highs for the day as far as calls. The biggest call was a 5,500 quantity for 15 September 450 call. Paid 1046. It's a spread. So let's see what it's spread against in a minute. The 15 September 430 put 32,000 of them, 468, paid $3. This also is a spread. So if we go down here, look at the time. Same time. This is probably what they're tied together. 15 September. They actually sold the 430 and they bought the 428. So they sold that 302 and then they bought 279. That's about 23 cents. Remember, these are $3.02 per share. You got to multiply 100 because each option represents 100 shares. So they paid 23 cents per share times 100, $23, times how many? 32,468. So that's a lot. So you got the close at 450. So for them to keep this money to be profitable, they're thinking it's going to stay above 430 and by 15 September, which is only, it's at 5 weeks away, a little less than that, 5.5 weeks. Now, on the other side of the coin, the next two happen the same time, 7:53:03, 11 August. It's a week away. They bought this 447 put. They sold the 437 put. So, where this one think the market is not going to keep going down, this one, let me get rid of that blue. So they paid that $2.12. They reduced their price by 63 cents. So that would be about what, $1.59 is what they paid. And of course times 100 times 10,000. And at 447. So the market doesn't have to go that much more down. It's at 450 right now. So this is probably a belief that the market will still go down a few more points and then they'll be in the money. So you can see that there are a number. Here's just an outright. 2 August, that's actually today. So it came and went. 447, so they kept that. They sold that for 2 cents, 5,000 of them. So $2 times 59.50, just under 12 grand. On the other side of the coin, here we got, these two are not tied. There's a couple of tied, 11.35.42. They're thinking, yep, probably still going to go down. On the other side of the coin, here's a bunch. 15th September, 432, 432, 432s. They sold them, puts. And underneath here, they bought 434s. And then they bought the 432. Oh, well, let's look at the time. So these 432s, 1, 2, 3, 4, looks like 5 of them, all happen about 636. And these 1, 2, 3, 4, 5, 432. So these could have been, they bought them, and an hour later, hour and 20 minutes later, they sold them. And they pocketed. Bought for $2.84, sold for $3.17, 30 cents to $30 times, wow, 3,000. But there's, you count how many there are. 1, 2, 3, 4, 5. That's almost 19,000 options. So they did a nice trade, bought and sold. Okay, so you can see there's the big one doesn't think the market's going to keep going. In the short term, this one believes the market's going to keep going down. Okay, tell you what, let's close this one up. And, excuse me here, get rid of that. Let's look QQQ. This is the Invesco Trust for the ETF, kind of mirrors the NASDAQ. The option stats for the NASDAQ, 4,266,000 calls, 5 million plus puts, put to call 1.21. Now what happened here? All right, let's give it a time to load up. Okay, let's see, it's still loading. Quite a number of trades. Okay, so the big one, 375 call, 15th September, 7,500 of them, 375 call. Well, that's almost right where it closed out today. But this is a spread. We'll see if we can find out what it's spread against down below. Whereas the 18 August 356 put, 16,000 of them, and no condition. So this is only 18 August. This is a couple of weeks away. It's 356, 374. What's that? 18 points down. So this they paid $1.23. So that's like $123 times the almost 17,000. And so they could be making some money, and that is, again, they're believing this trend going down still going to continue. Now here we have 17 November, 12/24. They say that's a spread. Here's a 12/24, 370 put. Okay, so this could be, they sold at 335 put for 17 November, sold it for 505. And we go down to 12/24. Here's 7,500 of them, and they probably paid 415. So that's, I mean, it's in white. The white generally tends to be a buy, so it could be spread against that. Not kind of a ratio spread. Twice as many. They bought, they financed the buy, they sold 505, paid 415. So they pocketed some change. Okay, see if we can find some others here. There, these two, 11/03/19. 18 August, 375 put, 375 call. Both of them 7,500. They bought that and they sold that. In fact, here's another one down below, 375 put. And it's for September. These two are tied, definitely tied. They're selling at 375. So this, to me, these people, this bet, or this belief is the market will probably recover by September and still be around 375. So they're financing that buy with that selling. So how many more of these? 18 August. Here's an 854. 5,000 of the 385 call. Same time, 854. 5,000, 395 call. So that's interesting. They're selling the call and they're protecting to the upside, 395. So this is one where they probably believe it's going to still keep going down. That way they get to keep their premium, the selling. Okay, so huge position against the market saying it's going to keep going down. So that's a Q's. Let's take a look at one more. Let's see what the IWM. The iShares Russell 2000. Well, we don't need the chain. Here's the stats. 485,000 calls, 1.293 million, 2.66 put to call ratio. And time in sales, there we go. Let's just add up. Okay, looks like it's done. Oh, the close today is 195. Okay, the biggest call was 220 call, 15 December, 5,000. No condition. It's in white. So it could be a straight buy, which means they think the market's going to recover. On the other side of the coin, the biggest selling was 188 put. They sold that September, 47,000. They received premium, 237 per share. So let's see what that's tied to. To the time at this one, 0632. So it looks like there, well, it's right there. So they sold the 188 and they bought the 186. So they collected this premium and they offset it. So the only difference here is 35 cents. So pocket 35 cents or $35 times the 47,000. Nice little pocket change to pick up. But in order to keep that, they have to, this is 195. They believe it'll still be above 188. And if we go down here some more, okay, there's 3 Septembers, 170, 183, 176. One's a buy, one's a sell, one's a buy. This could be what they call a butterfly spread. I'm not going to get into that right now. But here's one. It's an outright. 15 September, 195 put. 10,000. It's in white. No condition over here. So this is a belief the market will continue to go down. It's at 195 right now, so they paid 47 for 10,000, so $487 times 10,000. That's a lot. And they believe the market's going to keep going down over the next 5 weeks. It's almost 6 weeks. And we have a number. Here's another one, 1035 T2, same time. This is where they're buying at 190 put. They sold the 208 call. So that's another one. They believe in that. So they sold that call right there and sold for 101, paid 284. They made their costs 173. That's another one. The market, they believe, is going to continue going down. Here are a few outrights. This one, white usually means buy. So this would be a buy for 200 or the 220 call by December. Here we got this one, March 24, 165 put. It's an outright. Again, thinking the market is going to go down. Same for the 20 October 23, 185 put. Market going down. Here's looks like a spread. And not sure. Buying the 150 put. Could be selling. But it's in white, so not sure about that one. And let's see if we have any more in here. Here's a spread. Buying the August 190 call, selling the 190 put. Now this goes the other way. They believe the market's going to make a bounce here in the next 2 weeks. So that's an interesting one. Okay, so big number is right here. 188, selling that, buying the 186 for 5 weeks away. So they're anticipating a bounce in order for them to keep that premium. Okay, well again, interesting day on the market, interesting day in the options. And remember, always go to Remote Trading Room. And of course, these videos are for educational purposes only. Thank you very much.